Good morning, everyone. This is Marshall Giller bringing you the morning comment for March 16th. This is a big week for the G10 central banks. 4 central banks hold their policy meetings: the Fed, the Bank of Japan, the Swiss National Bank, and Norges Bank. And 3 released the minutes of previous meetings: the Reserve Bank of Australia, the Bank of England, and again, the Bank of Japan. Among these, of course, the big event will be the Federal Open Market Committee meeting that ends on Wednesday. The focal point will be whether the statement repeats the phrase that they, quote, can be patient in beginning to normalize the stance of monetary policy, unquote. Fed Chair Janet Yellen said recently that they would change this phrase at least, quote, a couple of FOMC meetings before they start raising rates. A couple means 2. So if they drop the phrase this month, they could start hiking rates at the June meeting. That would be convenient because there's a press conference scheduled after it. Next is the July meeting with no press conference, then the September meeting with one. Now, several Fed officials speaking recently seem to be comfortable with a rate hike by the first half of the year, so expectations have increased that the Fed may drop the patient word at this meeting. By the FOMC's standards, conditions have improved since their last meeting on January 28th. The unemployment rate has fallen, while the participation rate has risen. Average hourly earnings are rising a bit faster. The inflation rate has fallen a bit, but inflation expectations are rising. On the other hand, there are indications that growth is slowing. Can the Fed raise rates in a slowing economy? It's not an easy decision. Nevertheless, I expect that they will remove the patient phrase to give themselves the option of raising rates when they decide the time is right. And I expect that this decision will push the dollar still higher. As for today, the ECB will announce the details of its quantitative easing purchases. This will show how much it bought and in which markets in the week ended March 13th. It will be important for judging the likely impact of their purchases. If they manage to achieve this much with only a fraction of their 60 billion euros planned monthly purchases, then the euro could fall further. On the other hand, if they already reached much of their target for the month, then we could see some stabilization. Separately, ECB President Mario Draghi speaks. In the U.S., the Empire State Manufacturing Index for March is expected to show slightly improved business conditions for New York manufacturers, while industrial production for February is forecast to rise at the same 0.2% month-on-month pace as in January. The National Association of Home Builders Housing Market Index for March is expected to show a tiny improvement. The indicators coming in along these lines would show growth continuing in the U.S. and would probably serve to support the dollar. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.